Two banking giants face off after releasing their Q3 earnings. But is Wall Street celebrating or bracing for what's next? Stephanie Link pulls zero punches in this breakdown you can't afford to miss.
Earnings, so just tell us what you thought of JPMorgan and Wells at this point.
Yeah, and Leslie did a great job in terms of summarizing. I think that for Wells Fargo, it was about the net interest income. That's the reason initially the stock fell, because it did come in a little disappointing, a little bit light. But they actually raised the fourth quarter net interest income, and the full year was unchanged at $47.7 billion. But the expenses were a little bit higher, too. So it was kind of a mixed quarter, but the ROTCE guide, the profitability metric, going from 15% to 17, 18% is a really big jump. And it has everything to do with the asset cap lift. This is why lifting the asset cap was so incredibly important for the company. You know, the asset cap was in place in 2017, and they lost huge market share in deposits, 20%, actually. And now they're investing so that they can gain that market share back, and we're starting to see the results. With the guide on JP. I mean, my goodness, it was a great quarter. It's just that the stock is up 28%, and it's not cheap at 2.5 times book. But I mean, you had investment banking fees up 17%, trading up 24%, equities up 33%, FIC business up 21%, and their deal making fees or up 16%. So, I mean, it was really good across the board. It's just had a nice run. So I think if these stocks are weak today for any reason, macro-wise, I think you buy them.
Now, can you glean anything from, like, price to book? I mean, you wouldn't know what to do with these banks, would you, if you based it on that? I mean, you'd short JPMorgan and go long some, I don't know, Citigroup or something?
Yeah, I mean, Citigroup's trading at 1.1 times book. It's for a reason, though. They haven't executed in years. They're just starting to get their momentum back, but it's been a long time. JPMorgan has been just so incredibly consistent and just really great results. So there's a reason why it's expensive, but the numbers are huge. I mean, ROTCE of 20% at JPMorgan, that's crazy. So anyhow, the numbers are good. I think there is more upside in Wells Fargo. I happen to own Wells Fargo because I think, again, as they invest more in their business, as they can grow their deposits across many different lines of business, they will see more profitability and market share. And so that's why I think that one is quite interesting.
Is there anything in these results indicating any type of 1929 type situation in the credit? Anything? Can we make a segue to Pub Day from this step? I think we're not in a position where that's going to happen again, Andrew. Are we?
I'm hoping it doesn't. I think we are potentially more. I mean, this goes to what Paul Tudor Jones was saying a couple weeks ago. I think potentially we're more in a sort of 1999-ish,
you said that.
Maybe 97-ish
I took issue with something
kind of scenario.
This happens to a lot of guests because we start talking to each other. Yeah, but I took issue with your belly aching about that crappy Elizabeth Warren thing that we got rid of. Thank God. You acted like that meant that suddenly,
the consumer protection.
Yeah, you're like now the 1929 is more like because we don't have Elizabeth Warren's thing going. It's like good riddance.
Well, no, but a whole bunch of guardrails are coming down.
Right. Well, that
is true.
That guardrail was, we don't
might not have liked that guardrail. Look, we have the SEC. We have a lot of lessons from 1929. Hopefully, we'll repeat them.
We don't need the Fed worrying about climate change either, right? I mean, we can go too far with some of this stuff, don't you think?
I think actually that deregulation is going to open up a whole nother growth vehicle for these companies.
Could be safer.
Well, they have since 2008 they have had huge capital levels and requirements, and they're for the most part they weren't really necessary. I mean, they were really, really aggressive. So Basel III Endgame will happen sometime this year, I think, or early next year, and then the companies will not have to have as much excess capital. They still have to have a lot, but they're not going to have as much, and they can therefore use that capital to buy back stock, to increase dividends, and, oh, by the way, lend. That's what we really want them to do. That's what Jamie Dimon has been complaining about since 2008. He wants to lend to the small and medium-sized businesses, but they've had to hold so much capital as a result.
Will that save us this time, Sorka? I mean, the capital requirements are much greater now. Are they not?
I think so. I mean, I like to think that they're stronger.
They are.
I do. And I think that there's some real lessons that were taken away from 1929 that actually Ben Bernanke put into effect in 2008. But the truth is...
Have you heard from him?
I have, but the truth is that you need to have a politically independent Fed, because when you do have a crisis... Hold on.
Are you steering this to Trump, too?
No, I'm just saying about we're having a conversation about what's going on now.
We're not having a conversation about the bad orange man.
I'm not. What I'm suggesting to you is when there is a crisis, typically you have to do things that are severely politically unpopular.
I.e. Paul Volcker.
What happened in 2008 may make it tougher for the Fed to act as strongly before. There's still a huge part of the Congress that is furious about that.
Yes.
There's still a huge part of the American population.
Yes, but that was the right answer, and that was the lesson of 1929.
It was the right answer at the time. And I just wonder if the ripple effects are still kind of...
Oh, I think it'll be very hard. But I think one of the things you go and realize is back in 1929, to the extent we're talking about it, one of the reasons they sat on their hands as much as they did was because they were scared, because they were a new institution. They were born in 1913, and they were not just scared about getting hauled up in front of Congress. The thing was so new that they were scared, frankly, that the entire institution would be dissolved, just like the Consumer Protection Bureau.
I mean, there are people at home right now headed to Barnes & Noble. Serious. Even though it's not open.
It opens at 10, folks.
But it's like an it's like an iPhone. It's like going to be like when Tim Cook. You should show up at the big one. It's like when Tim Cook. Stephanie, thank you.